Sure. Good morning to all of you. तो आज है मार्केटिंग सीरीज, स्टॉक मार्केट सीरीज का डे, कौन सा डे है? मे बी day 3। तो आज जो भी मैंने लर्न किया था, आज तो कुछ लर्न नहीं किया, सच कहूँ तो ये कल का जो लर्निंग है वो, क्योंकि आज था संडे और आज बहुत सारा काम था, तो बहुत चीज़ें आज कंप्लीट करना था, उसमें भी कुछ समय भी बर्बाद कर दिया इस तरह। हाँ, तो कल का जो मैंने सीखा वो यहाँ पे एक्सप्लेन करूँगा अभी। सो द फर्स्ट थिंग दैट आई लर्न इज़ LTP, लेटेस्ट ट्रेडेड प्राइस। तो इसमें क्या हुआ था मैं बता दूँ पहले कि इसमें जो मैम थी, द रचना रनाडे मैम, he showed and displayed a website that is moneycontrol.com, and on that website he displayed several types of aesthetics. So the first thing that I learned tomorrow is that the market timing and how it operates and how it functions mainly. So the first thing, the what is the time of a stock market? Uh, uh, so we know that every stock and the general term you can say the share sold or purchased in a uh, stock exchange like BSC, NSE. So when they open and when they close, so the market time is 9:50 to 3:30 p.m. This is the actual time, but for the brokers it extend to the 4 p.m. So this is the timing in which you can purchase and sell the shares in any stock exchange company. So you will ask that means if I want to purchase any share, then I will wait for the next 9 a.m. From 4 p.m. to 9 a.m. I can't buy share or purchase share. So no, this is not completely true. Because there is something, a space for the investors. Investors means here the long-term investors, because you can purchase share here, but your share will be the execute tomorrow at just its real timing, that is 9:50. So the thing is, we should shave out this, that the pre-opening market session is a term that is known as the 50-minute sessions. The first 50-minute session is a most important timing for traders when start markets. The most of the fluctuation that are shown in the trading in the stock and shares, that is shown for a day, the first just 15 minutes. In that minute, the various and a huge number of person purchase or sell the stocks, even those shares to executed who they are purchased already, in which AMO, after market order. After market order means the shares those are being purchased after the 4 p.m. So this is to a factor that make the fluctuation during the just opening timing. So the market fluctuates more, not actually the uh, those shares executed exact from 15, but it started from exactly 9 a.m. and from 9 a.m. to 7 a.m. order are placed, and this is the timing from 9 a.m. to 9:07. Here you can see a huge fluctuation, a huge movement in the share market. From 8:98 to 9:11, the uh, hmm, order matching, order are matched, uh, and for last 4 minutes, that is known as the stabilization. Here you will got the less movement as compared to the last 11 mm, minute. So the what is the pre-opening market session? Pre-opening market session means the time, uh, 50-minute time before opening the market, that is called the 9 a.m. to 9:15 time. And what is called 9 p.m. to 9 a.m., that is called AMO, after market order. Not AMO, AMT. We will call it AMT na. Hmm. After market time, the order that are placed within this time in AMT after market time, those order are called as what? AMO, after market order. Hmm. So the main purpose of the order, those are purchased in these hours from 9 p.m. to, so mainly from the for the long investments. So you can purchase because the traders mainly earns by using the fluctuation just at the beginning of the market. Because they play with the just in rupees, in just uh, decimal rupees, a fraction of rupees they play, because they invest a huge amount of uh, money, and even they got just within some profit on that, that converted into a huge profit. So the main purpose of trading is that less timing huge benefit or huge profit or interest. So they play with just a little bit of fluctuations, mainly traders. So that's why they play with the just just beginning time of the market. And but the real investors, hmm, classic investors who uh, uh, invest for a long time, they don't matter that. They already know that I am playing for a long term. I'm playing a long game. So the just fluctuation of 1 2 rupees just not matters for me. Hmm. So after that, I see, I see get up opening, get up, get down opening. So what is the get uh, up opening and get down opening? Uh, so if the share price at a higher than the previous day closing price, this is known as get up price, and it is indicated by the upper triangular triangular uh, mark, that will be the green color. So the get up opening get up opening means starting. So get up opening, up, get up opening, the opening which are being today is up than the previous day, the value at which the market has been closed. As compared to that closing of the previous day, today's market is what? Initiating or opening as compared to that above price. So this uh, opening is known as get up opening. So it may be also possible that the at the price that which the market yesterday closed, there will be a chances the market will be today, it may be open below that price. Yeah, it is possible to. So now this opening is called get down opening. So when it will open above the price, that will be known as which, get up price. And the gap up opening, and when it will be the open with the lower price, then it will call as gap down opening. Fine. Hmm. So these are the two important terms. Then I will discuss about the bid price, that is the quantity, almost kharid bikri, means how many shares are purchased, and the offer price. So I have not completely understand really these two terms, that is the uh, bid price and the offered price. Offer price seems like means at the price most of the shares are offered or sold. But I have no any idea about the bid price, so I will but I have already mentioned here the at the price on which we purchased the share. But I am not satisfied with the answer, so I will again recheck it, cross check it. So go to the next thing. We will see the various things in that website, the money control. You can also play a game with the uh, virtual game, that the many moneybuy.com, on the same website, uh, where you can invest your virtual money. So that is a game you can uh, play that game for the sake of learning and knowing about the investing. So I will play that. But firstly, we discussed. Not I will play today, but I will later. When I will play this after this completing the series of 7 days, I will show that. So next thing that we learn about volume. What is volume? Number of shared traded on the specific date, or it can be the same day. But same day means any specific day. Same day is also a specific day. So the number of shares that are traded means they are transited, purchased plus sold. uh, uh, it is also possibilities the one share has uh, sold it 5 times and purchased sold it 5 times. So it will be considered as not one share, it will consider as 5 shares. So the volume makes it will 5. So the that is called the volume, how many shares had been traded that day. So that is called volume. Volume can be also uh, calculated as for the last 10 days, 1 month, and 1 year, 1 year even. Mm. So the next thing, that is corporate action. Corporate action is a panel in that website money control, and when you go to the uh, that corporate action panel page, you will got several hmm, uh, points about like board meeting, AGM, EGM, dividend, bonus, and rights, splits, several things. So we will try to understand most of them. So first thing, that is board meeting. What is a board meeting? So the when even I am confused with that. What is board meeting? I will not guess further. I am going to take it again. I have idea about this, but I can't just share you like the guest idea. So I can't share the just hmm, hit and trials. So the next thing that I can share with you is AGM and EGM. That is the annual general meeting and the extraordinary general meeting. That is held with the shareholders mainly. That is called the extraordinary general meeting, EGM. Dividend, we already know about dividend. What is dividend? The money that we got from our shares, the profit of our shares, that is called dividend. And we also know about the thing, that most important thing about the dividend. So if we got dividend less than the 10 lakhs, it is completely free. But your dividend is above the 10 lakhs, so you have to pay the 10% on 10% tax on that. But there is also one more type of dividend for IGMF. Why I? It may be, I have to say that LTG, LTCG, long term capital gain. So through long term capital gain means you have invested, purchased a share for uh, a share for 1 year, and when you make interest on that, that is called the uh, that also generates the dividend. But that dividend is limited at the uh, just 1 lakh, not like 10 lakh. You if you make money in long term capital gain, uh, uh, then it is restricted to just 1 lakh. Means if you gain dividend more than that, you have to pay the taxes similarly, 10%. So dividend is completed. Bonus. So also we know about the bonus works like something, a stock is split. So extra bonus is similar thing like the stock is split. It makes convenience for the company and the new share holders or the purchasers, and this is make benefit to also the existing shareholders, because they got a number of bonus share, and their share multiplied and increases in a huge numbers. And also they got profit when the value and the price of the share is increases. And similarly, like bonus, is a stock is split works. So the purpose of the stock split is almost similar like the bonus. It is used for the sake of the new customers, that or sake of the company's profit, uh, the company's growth mainly, because company wants to sell their shares to the several person or most of the persons, so that they decreases the value of their share uh, by splitting that or giving extra bonus to the already shareholder, extra shares as a bonus to the existing shareholders. Next thing, that is jubi yeah. So also we analysis about the what is this? It is something good thing. It is. So there is a company, Jubilant Foodworks. So we analysis about this company of the announcement date of the bonus share, and also record date and ex bonus date. So in already I have discussed these things in the previous video. There is a just a little bit extension of that. So announcement date is that date on which company announced that I will going to provide the bonus share for my all shareholders, those who holds the share on this specific record date. So you have time to purchase the share of my bonus for specific this X bonus date. After this X bonus date, the offer of the extra bonus, the bonus shares will be the completely going to be excluded. So these three dates are very important. If you want to purchase the if you want to gain the benefit of the bonus share of any company, so you have to focus on these three dates. Which one? Announcement date, record date, and the X bonus date. And also there is a term that is used, T+2. T+2 is nothing but the adjustment settlement date. The settlement date means when you purchase the bonus or share of the any company, they don't directly give you the shares. They takes time. So that time that is taken to after, or providing you the shares, whatever time it is taken, that is called the settlement date. And this time it is T+2 means market time, मतलब trade time plus में 2 days. So this is called T+2, and the time it was, now it is T+2. Later on, when there was a concept of the physical stocks, that was quite longer, like T+30. Trading day means market day plus में 30 days extra, because it was tough to transport the shares, physical shares, through the several dark and different transport manner. It was too difficult as compared to the these days. Now we stock exchange, you already know, it is a platform where investors buy or sell the security for each other. We also performed just studied about the like Patanjali shares. I have already discussed it. Then I have one thing that I mentioned. One more stock exchange is emerging in India, that is MSEI. And the members who are called members, supporters, promoters. Not members. The members we are talking about, those are called the owners. So here members are the brokers. We are talking about the member of the stock exchange. So the member of a stock exchange, who is the member of a stock exchange through which we can purchase or sell any shares of a company, or so who makes all the transition of the shares? The person for this task who is declared, that is called broker. Dalal, can in easy word you can say it. So investor can trade in a secondary market only through the member of the stock exchange, that is known as broker. So accounts, opening accounts in a stock exchange, you have to know three types of backend accounts, that is a demat account, trading account, saving account. I have very well explained this all three accounts in the previous video, so you can go and see that. In that video I have made this one as a stock exchange company, and this is a like a specific company through which we are going to, or of which company I want to purchase the shares, and I am the investor, so I can't reach the directly to this company. For purchasing my shares, I have to firstly visit this stock exchange. And how will I buy or purchase shares? Through this account. Which account is this? This is the trading account through which just I purchase or sell my shares. And which account where I will put my or kept my all the shares. So that account is known as demat account, where I put my shares. So in demat account, just you can put your shares, not your savings or the money. For money you have to open one more account, that is saving account. Fine. Next thing, that is investors. Who are the investor and types of investors? So that is the most important thing. So there are several types of investor who invest in a company or who they purchase the shares of any company. So first type of investor that are known as the RI, retail individual investors. So who is the retail individual investors? Like us, we general people. We are the retailer individual investors. So we are called as RII. After that, there is a one more investor, that is HNI. So who they are? High net worth individuals. So there is a difference in RII or in HNI. So who are called HNI? So if company is declaring, so some persons like RRI and some of them like HNI. So who is HNI? How can you identify, and how company identifies someone like HNI and RRI? So the person who invests in any company more than 2 lakhs. If any person or any maybe group of person. So any person who invest in any company more than 2 lakhs, those person and that person will be known as HNI, high individual net worth, and below than that everyone will be known as RRI, retail individual investors. So next investor, that is DII. So who they are? DII, domestic institutional investors. This is not a person, this is an institute. DII, domestic individual investors. Individual investors, they are the national ones. So who they are? Like banks, like service insurance company, like LIC, and also it may be mutual fund too. It is also a DII, domestic individual investors. So you go to them and they will invest your money, like a mutual fund. You go to the mutual fund and you pay the mutual fund. A mutual fund buy or purchase share and you invest your monies on behalf of you. And similarly, the money you go to the LIC for your insurance, they invest and gain and make money on that money. So that's why they give you just a little bit of interest. Because they are making a huge interest on those money. That's why they are providing just a few just returns, your LICs, your insurances. So they are who they are? DII, domestic individual institutional investors, not individual. They are not person, they are institutes. So similarly, like DII, there is a FII, foreign institutional investors, or we can also say foreign what portfolio portfolio investors. So they are similar like the DII, but they are foreigners from the outer country. They invest in any specific company, is company. So next thing, that is issuers are the companies. Companies are known as issuers. T plus 2 already we have discussed, that is the T means trade day plus 2 day, that is the settlement day, adjustment day. Trading, clearing and settlement. So trading means when we trade, or clearing means what means clearing? So I don't know about this clearing, there is a doubt. So whenever I got any doubt, I will just make it round or a square. And I have said that I will cover it in the next video, because this is the same day. I have already told it the second video too, but this is the same day. I will cover it in the next video. Next thing, that is a clearinghouse. Clearinghouse who they are. Clearinghouse. I am confused to clearinghouse. I will discuss this. Depositors and this is one of the more important concept. Yeah, depositors. So the who are depositors? Tell me. And also depository participants. So how can I explain the depositor? So the depositors are they, or you can easily call it as a company. Depository is a company where you can go and provide your physical shares, and they will provide on behalf of that physical share e-shares. That is that you can or simply you can say they dematerialize your shares, and from there we got the concept of demat, where the dematerialized share are kept. That is known as demat account. That those are not physical shares. They are dematerialized from material to dematerial. So digital format. So the company which performs this task, that is known as depository. And there are mainly two depository in the India, that is NSD and CDSL. NSD, National Security Depository Limited, and the second one is CDSL, Central Depository Service Limited. And who is the participant? Depository participant. Those are two brokers who they perform this task to converting your physical shares to a electric dematerialized share. For that you have to not access the directly to the these institutions NSDL and CDSL. For that, firstly you have to go to the your brokers, any brokers who they are listed in that company, who they are taken the membership of those all the depository company. So you go to those persons and you will say I have to dematerialize my share. So they will ask you which company share, which company's share you have. So you will say I have this TMC. TMC companies. I have announced that my company is TMC. So TMC company share I am. So broker see the TMC company is in which depository it is listed. So if it will be the listed in NSDL, so he will go the NSDL, and there he provides broker will provide the physical shares to convert into digital share. No, fine. And if your account will be in the CDSL, your company will be listed in the CDSL. That will go into CDSL and perform the same process. No? Fine. The thing that is called mapping. You can't directly approach the depository this time. So you have to firstly go to the bankers, depository participants. They perform mapping, they map the thing, but I don't map. So also I learned about the register of the members. Register of the members. This is kept on the depositories. E-list. There is a e-list about the share, and it contains the several detail about the share. That is called the register member. Register of the members. Contract note. That thing is a contract note. I have already also discussed about the contract note. A contract note is a recipient that is provided by your broker when you go to purchase any share of the shares of the company. So your broker will be provide you as a receipt, and the contact note is always provided within a 24 hours when you purchase any uh, share of the company. So it is mandatory. So broker have had to provide uh, this time to has to provide the uh, contact note of the your shares. So clear contract note. So this is the today's matter. All fine. Well, again, tomorrow.